Welcome everyone back into Crypto's News. It is me, Omar Bam, aka Crypto, and it's always such a treat to be the source to bring you the news that is most important in crypto and make sure you stay on top of things. There is just always so much going on, and I appreciate you showing up to support the show. So let's go ahead and do so with the prices. Take a look at what is going on. So it started off the day somewhat negative when it came to crypto prices, but boom, there was a little bit of a spike there, which was crypto following the NASDAQ. So the tech stocks started to move up, and Bitcoin has been trading right alongside of it, as well as many of these altcoins. This is what we saw today. It was a bump over 3% at one point. Now it's given some back. It's only up 1.5% on the day. Bitcoin, Ethereum up 0.2%, but at least it's not another red day. We're still waiting for confirmation to see what goes on to the upside or downside, but for now, we have not broken either way with any sort of confidence. We have Ethereum gas prices down a lot. As you'll see later, some of the tourists that have been in cryptocurrencies have gone away. Those I'm hearing activity drops of about 50% from a lot of the users who just show up when it's really a major bull market, and now we have the long-term hodlers here. So we had yesterday Ethereum gas prices all the way down to about $1.05, the lowest that we've seen in a long time. Right now sitting around 41 Gwei. Wallace, what are you doing? He just knocked something over. Hey, great to be back with you, Scott, as well. Thank you so much for your comment there. Hi in Australia. How are things in Australia right now? I haven't been hearing much about Australian news, so it'd be cool to hear what the situation is like for you. I know it's crazy when it comes to gas prices and other things. Gas did go down. I mean, oil went down today, which is nice to see. So hopefully you're having a little bit of reprieve at the gas pump soon. OPEC nations, oil-producing nations, agreed to increasing supply, so maybe that'll bring down some of that sticker shock for us around the world, hopefully. Although natural gas prices, I believe, are up. I know that's hurting a lot of people in Europe, especially. So if we look at the longer-term chart here, just wanted to take a note of it, of where we're at here with Bitcoin. So this is the daily Bitstamp. Just the trend is your friend. We have a lot of folks who are the long-term hodlers who are keen on picking up here. They're calling a bottom. I don't know about that. Once we have a few days of green, or at least not getting red, there is a lot of optimism that happens, but we haven't seen a real change from the trend yet. We are continuing to note that there are in fact these kinds of triangles, these pennants. It's really been a situation where on social media for cryptocurrencies, people are discussing what pennants are and their relevance or importance. And I think for the most part, people are saying you can draw triangles anywhere, so it doesn't really mean anything, which is quite true. But we can generally derive that we will have a break to the upside or downside with many of these triangles, whether they're strong or not, I guess, is a matter of contention, but they do tend to signal some bigger moves, especially with what we've been seeing with volatility. I wouldn't be surprised to see a bigger move to the upside or downside. I think upside would give us more confirmation that this could be a nice sideways period, which is what we do see at the bottom, like we saw at the bottom of the last bull market. We did see a lot of opportunities to buy to the side through so it's not like a matter of you having to time it and necessarily buy today. It's not a matter of deciding whether today is the absolute bottom. You're probably not going to be changing your gains or losses very much really over the long-term perspective. So sometimes patience is the best way to be, especially with this kind of strange market that we're having right now on a macro level. And we are still sitting around the all-time high, around $20,000, all-time high of the last peak of the last bull market. Usually it doesn't drop below that. So really it's your guess to see if that's going to happen or not. We still have, for the most part, fear being the driver of the narrative here. We're seeing at a 19 on the fear and greed index. It's up 5 points from yesterday, but still pretty low at 19. Last week it was at a 10, and so was last month at a 10. But it is ticking higher, so maybe we will just continue toward green territory. I've heard people talking about the Fed and how they're going to have to reverse course again sooner rather than later. So we could be seeing that coming up. Although I'm hearing for the most part that won't be happening until at least September, if not Q1 of next year. So again, not saying that this is the exact bottom. Also not saying that we are going to continue down just because the Federal Reserve is deciding to continue to hike rates. We pretty much have already heard that they're going to be hiking rates 75 basis points at the next meeting, which, by the way, is coming up on July 26th through 27th. So I think there's going to be volatility as we tend to see around that, even though we are pretty much expecting a 75 basis point move at that point from the Federal Reserve here in the United States. We are likely to have that volatility happen just because of the verbiage that is used by Fed Chairman Jerome Powell as everyone tries to dissect exactly what is going to be happening moving forward and how bonds work. Although we're hearing that bond yields today are dropping quite drastically, we have seen that people have been pointing out that the Federal Reserve balance sheet has been increasing. So they've been buying up, despite saying that they want to see interest rates climb. They maybe been buying mortgage-backed securities and other things. So just a lot of shadiness here, perhaps, and not being completely forthcoming with what's going on. So you kind of, it's hard to get a full picture of everything going on. I do try to get as much as I can. And I think generally what I'm hearing from most traders is that we're going to see a lot more downside still to the stock market, and that could be affecting other risk assets as well. Today we also had gold down. We had other commodities down. Just to cover what's going on today. What's up? Hey, Tech Ken. I'm here with another hit for us, hopefully for you guys, and hit in a good way at the show. Hey, Christoph, nice to see you, brother. How are you doing? And Oliver, let's go. So the dollar was something else that was just, it's all over the news, which is why I kind of have to cover it here, because Bitcoin, especially nowadays, does not live in a bubble anymore. We even have the ability with BITI, this new ticker symbol, to get exposure to Bitcoin shorting. So if you think Bitcoin is going to continue down from here, you can actually go into your brokerage and pick up BITI and now get exposure to that, which tracks the futures price as of last week, as we covered on this show. But yeah, so again, not in a bubble, but what we're looking at specifically here is Euro versus US dollar. So another hot topic today is currencies, and discussing this, that it's down about 20% over the last year, from about $1.20, $1.18, $1.20, around that region, all the way down to $1. I saw it hit $1.02. 1.0286 was, I believe, the low of the day that we had, which would bring it almost on parity, which to me is crazy, because I remember going to Europe and being like, damn, I'm losing so much purchasing power when I was younger. Whenever I would travel, I would have through college, I would go on a trip to London to go play piano for like a play, for example. That was one of the trips. And I remember losing an instant 30, 40%, it felt like, in my purchasing power when converting dollars to euros, and how far we've changed since that as we hit this parity level being about the same today, which is nuts. Some are seeing within the next quarter, I believe, a 60% likelihood that we'll hit that parity, although it looks like that could be happening sooner rather than later. Very interesting as the dollar gains strength relative to most currencies around the world, which I heard discussions of how negative that could be. Just the fact that the dollar is kind of decimating everything else out there, and the Federal Reserve is hiking interest rates, which would make the dollar even stronger, and that could cause all sorts of stirs around the world. But at the end of the day, it's all a race to the bottom as these currencies are really backed by nothing but the military. Oh, and in celebrating the military, I guess we can go ahead and celebrate July 4th, Independence Day, and at least those who fought valiantly to free themselves from the monarchy in England and fighting taxation of all things. There wasn't even an income tax, I believe, back then, which is quite wild now, just how dumbed down we've become as millennials. We really have apathy out there now to really impact any sort of change. It was a great podcast yesterday I was listening to with Lex Friedman talking to Joe Rogan on their second podcast, and talking about how you have these plants, you have the CIA, you have FSB, you have the KGB. These intelligence forces are out there to literally plant narratives to change things, and for the most part, they're not really trying to help you. They're just trying to gather data and trying to impact things for whatever reason or other. So just a strange time when we look at the technology nowadays and the ability for them to really change the airwaves and change our very perception of reality. Just a very strange time to be alive. But props to those few freedom fighters who met up in the coffee shops to organize that yesterday, so that I didn't get to make a video. Yeah, it's going to be a tough 3 months. Yeah, I hope things do get better sooner rather than later. Hey, what's up, Zanny? What's up, Arania, though? Thank you for that comment. I thought this was pretty funny, so I have to share with you. Rand Neuner, previously of CNBC, crypto, South Africa. He used to have a show. I don't know if he still does anymore, but Rand Neuner said, "Did the Dixie, the dollar index, just get listed on Binance? Boom!" Because of this huge pop. Oh, man. Anyway, we have Celsius in the news. I believe this is the fifth time that they've done this. They have they have a position open, a CDP open with Maker. It's one of the first, if not the first, decentralized finance application that existed through Ethereum. I had early exposure to it myself, and you can see here that they've been paying down. Well, you can't see that they've been doing it, but they have been paying down their debt. Now it's only about 42 million DAI. They've been paying it down drastically. I believe just yesterday or 2 days ago, it was at double that amount. And so their liquidation price now, which is what a lot of Twitter is following, is drastically lower. Some were following it when it was over 14,000 bucks, actually closer to the levels that we're at right now, and it's just been dropping and dropping as Celsius has been paying down their debt. So I'm not entirely sure what their game plan is for this. Some are saying that they're trying to pay down all their decentralized debt because they know the smart contract is going to be unforgiving and it's going to liquidate them at a certain price level, and they're gonna lose their locked collateral if they don't pay it down automatically. It's not like they can file for bankruptcy with courts and they're going to be forgiven by Maker. No, no, no. So maybe the game plan is that they're going to pay down their debt and then file bankruptcy, or maybe this is something that they need to do before moving to next steps to help creditors. I'm not entirely sure what the game plan is, but if you have any sort of idea, please let me know in the comments, and the other people down below. I'm sure we're all interested. But following up here with Celsius, people continue to feel quite insulted because every week they receive these emails saying, hey, you've gotten this much in rewards. Your weekly rewards have been added to your account. Whoopee, right? And you have like Crypto Steve out here saying, this is honestly insulting. Celsius Network is still paying weekly rewards while holding my crypto hostage. Some are saying it's insulting that they're still sending out these emails, even though there's a possibility, and maybe even a strong possibility, that these funds are not really going to be available at least in the way that have been expected by depositors anytime soon. So, I can see why it would be upsetting to continue to do that. I mean, it just seems like it would put Celsius even deeper in the hole, right? Because you continue to pay out these rewards. Some of these whales have locked up huge amounts. Like I believe Simon Dixon gets like a $3,300 reward. He screenshotted his Celsius rewards yesterday and put it up on Twitter. So he gets something like $3,300 a week. So it's not just him. You have many who are getting these rewards from Celsius, which would add further debt or at least more money that Celsius would have to give up in the event that they enabled withdrawals again. So why continue to dig a deeper hole unless you're really insolvent and you just want to look good for users, but right now you're just looking bad. It's an odd move, I thought, even from the beginning. Maybe it made sense in the beginning, but now it just looks grimmer and grimmer that they're going to be enabling these withdrawals anytime soon. So maybe in their best interest for customers would be to stop doing this, although that might signal even more fear. Oh, wow, we got 25 concurrent viewers. Welcome, everybody. That's actually the most that we've had, believe it or not, since the relaunch and the release of the show again. So thank you for that. I encourage you to hit the like button so we can get other people in the stream here. Make sure we're all on the same page with what's happening in crypto today. So Celsius also, just to wrap up with their news, this came out yesterday. This was by Calcalist. They said that they learned from a source. I'm not really seeing the legit source, but I don't see why they would lie, that Celsius is laying off 150 employees. And that is about 25% of their workforce, looking at about 650 employees, 645 employees that they have according to LinkedIn. So this could be a good move to save some money. I mean, they still have 3/4 of their staff, so I guess there is some hope that they will be all right at the end. At the end of the day, all we have is hope. And I think it would be really a boon for the whole market if Celsius was to come back. But based on the Arthur Hayes blog, the last one, which I didn't read on the show, I read 2 blogs ago, and I think that was well received by you guys. So do let me know if you want me to go ahead and read in a podcast-like audio, like I did for the other one, the entire essay for the latest blog post, because it does cover this entire recent debacle that's gone on with Three Arrows Capital, Celsius, BlockFi, and all of these lenders kind of being tied together, and how they really screwed up, and how messed up the situation is in the formation of some of these companies. He did the best, most in-depth write-up that I have seen in regards to that. But it is a fairly long one, but if you'd like for me to cover that, I will do that. And if there's really not much news, maybe I'll do that anyway. But I think it is necessary information for you to know, to be up to date with what's going on in crypto. His latest blog, that is. Hey, what's up? 10 pence. I do appreciate you, 10 pence. Smash up the likes, reminding everyone. So yes, according to Glassnode Insights, they frequently publish some of the best forensics and blockchain research that is out there, have talked about how, as I alluded to in the beginning of the video, the tourists have now departed. We are now in a range where really the strong hands, the steel hands here, the steelmen are the ones who are holding for the most part. This is pretty crazy. So as the first half of 2022 comes to a close, Bitcoin has locked in one of the worst monthly price performances in history. So I guess this could be a good thing, saying that it really hasn't dropped much worse than this ever. Prices traded down minus 37.9% over the last 30 days alone, competing only with the 2011 bear market, which for the crown of the worst trading month in history, which was when Bitcoin was trading below $10 for scale, they say here. So with US inflation estimates for June remaining elevated and storm clouds of a potential recession looming, now that's what the pundits on the mainstream and even all finance are talking about. The talk's not going to be about inflation right now. No, we want inflation, actually. And it doesn't matter because the worst thing is recession anyway. The market remains heavily risk off. This is evident in the on-chain performance and activity of Bitcoin, which has reduced modestly in recent weeks, with network activity now at levels coincident with the deepest bear phase in 2018 and 2019. It appears that a near complete purge of market tourism has taken place. I believe last year, or was it 2 years ago? We lose track in crypto. It was the first time that we had talked about the tourists. This is a relatively newly coined phrase, I guess you could call it, that has come out. I like it. It really makes sense. Those who show up when the NFTs are hot or show up when the ICO boom is taking place, and then they talk about how it'll never come back. There'll never be a boom again. Although I'm hearing a lot of talks about that. Like now that we've dropped in price this much, it's going to take a lot of confidence to get money pouring back into crypto. But I don't know. At this point, it looks like really the two places are either the US dollar or crypto. But as some are saying, how is crypto proving an inflation hedge when it's just so extremely volatile? What is going to lead people to think that Bitcoin is the place to be when after every halving it goes up 70% more, drops 70% after? It's wild. But I guess we haven't seen anything in the grand scheme as we may be about to see. So we'll really get to test these things. This is what Bitcoin was created for after all. Solvency issues and so on with banks, which I guess we'll talk about one bank in a moment that is shutting down. I think you guys would appreciate. But anyway, the activity does remain, however, appearing to align with a steadfast trend of high conviction accumulation and self-custody. So a lot of self-custody perhaps as money is leaving exchange balances. Exchange balances are draining at historically high levels, and shrimp and whale, so shrimps are those who have less than one Bitcoin, and I believe that whales are those who have 100 or 1,000 or more Bitcoin. Balances are increasing meaningfully. With such complex and arguably divergent market focus, what am I saying? Divergence market forces. In this edition, we will attempt to identify the key trends that are emerging in on-chain performance and supply distribution for Bitcoin. Whatever, I'm not going to read all this. I'm just going to go ahead and skip to this chart here, which shows what they're trying to illustrate here when it comes to the tourists. So this is the range of low activity, this shaded red area here, low activity channel, and in the orange these bars are each the number of active addresses in Bitcoin. So they do another one where they try to not just look at wallet addresses and try to use an algorithm to figure out which might belong to certain entities. But for the sake of this video, I'm just going to take a look at this. It's quite similar in the sense that we are again within this channel here, which has historically signified that we're in a low activity channel, which is a bear market. I think no one really needs to know, again, no one can really disagree whether we're in a bear market or not, whether we've been in a bear market, considering just how far off the highs we are. But it is nice to know that bear markets do come to an end, and we have to enter the bear market before we, again, shoot up. It's just always been this way. So, yeah, you can see whenever it's over this channel, that's when we have the tourists, you could call it. And whenever we're in this, the tourists have pretty much left. And we're about 50% off of the peak looking at some of the numbers here. And that's where we pretty much align historically. So this could be a good sign that we're not just entering the bear market. We've already been in it, whether you're thinking that it started in November 2021, or as I like to think, maybe closer to the summer of 2021. One thing that I think is kind of weird that I don't think many are talking about is that when we look at these market caps on like CoinGecko, like I showed in the beginning of this video, and I'm just thinking out loud here, this doesn't really show NFTs, and NFTs were some of those tokens that swallowed a lot of the value accrual during this recent bear market. Of course, NFT volumes have dropped significantly. Even if you're talking about the top NFTs that are holding up better, they're still selling off. But yeah, this is kind of hiding. While we're looking at this less than $1 trillion market cap, we're not really seeing the full picture here with NFTs. But it's very difficult, of course, when NFTs are still being issued by the thousands every single day. But although I doubt they're selling to that degree as they were. Anyway, I thought that was some interesting stuff. What do you guys think? Hey, be mindful of love. I'm going to be mindful of love to you. Nice to see you. Much love to you. The BitConnect days. The BitConnect days. Hey, hey, hey. There are so many who have no idea about BitConnect and what that era was like. There was unity and there was disunity, like there always is in crypto. But that was something that brought us all together. Crypto lore, crypto history. That's really what we're doing here on the show. Is we're sharing crypto history, and some of these narratives that we talk about eventually just evolve into something huge at some point. It feels like as we cover the news, they hit some sort of peak sometimes, some of these like fireworks, and there are all sorts of opportunities around those that happen. But been wild to follow this technology throughout the years for sure with you guys. So I thought this was of note. Indian crypto trading volumes have fallen off of a cliff after this new tax deducted at the source went into effect at the beginning of the month. So on July 1st, this 1% tax deducted at the source thing, which I think is every single transaction, over 10,000 rupees is taken. It's taking place. This 1% tax, which has caused a huge drop off. For example, on the biggest Indian exchange, Wazir X, it's down 83% from Thursday to Sunday, the trading volumes. Just like with Coin DCX, it's down 70% trading volumes, ZebPay down 76%, and BitBNS down 18%. So very interesting. As the regulators try to get theirs, they just cripple the businesses around this. Of course, India has not been very friendly toward cryptocurrency, so not too much of a surprise. And by the way, 10,000 rupees is a very small amount. It's only about 125 US dollars. So terrible to see this kind of management from the financial services industry, but that's exactly why I was interested in crypto, and many others have been drawn to crypto in the first place. Oh, so this was of note. Right before I started the show, I saw this news. Had to make sure I covered it. So, Circle is not really going to be pursuing any partnerships with Eurocoin in Europe, which is just weird to even imagine. We were talking about Eurocoin over the last few episodes here on the show, and you would think that just like with USDC, that Circle, the company that issued that stablecoin, would be doing the same with EuroC, but they will not be able to because of this new MiCA bill, the Markets and Crypto Assets bill that has been coming out because of the collapse of Terra, stablecoin, UST, triggering waves of uncertainty around stablecoin regulation in the European Union. So yeah, a lot of these issues, of course, that have happened with these centralized finance companies have caused a loss of credibility and reputation across the whole space, and helps the regulators really phone in now and say that crypto is phony, which is just not true, because decentralized smart contracts, actually decentralized finance, has proceeded without a hiccup just fine. Those have not been the things to go down. It's just been the centralized finance operators that have operated very opaquely, not sharing what they're actually doing with funds, participating in very risky things, oftentimes between each other, that has caused some of these bills to now be introduced with certainty, and is causing some pressure, of course, on this stable coin. So yeah, ultimately it's not going to be for right now trading in euro, at least with any sort of euro-based companies. It's going to be Eurocoin is going to be for Americans, baby. It says so here. Where is it? It doesn't matter. It's gonna be for compliant U.S. companies for the most part that are regulated here, which is of note. Of course, if you're trading on decentralized smart contracts using an ERC20 like Eurocoin, should not be stopping you. The power of free market. So just wanted to bring this up. This was news over the weekend. I think it was Friday that it came out that Peter Schiff, staunchest Bitcoin critic, I think he likes to bash on Bitcoin just to have a voice on Twitter, and just to get clients for Euro Pacific Capital, his company. But Euro Pacific Bank, his bank, which is now headquartered in Puerto Rico, has been stopped by the financial regulators in Puerto Rico because of not conforming to minimum capital requirements, so not having a certain amount of money in the bank. According to Peter Schiff, he's a new entrant. He's a new entrant into Puerto Rico, and him and his team just didn't know about the capital requirements. They would have gotten more capital requirements, and plus they're trying to sell the bank, but they were stopped by selling from selling the bank because of issues. IRS is trying to plant narratives out there and leaking to the news that the bank has been involved with money laundering and so on. I mean, here's what he's saying. Despite no evidence of crimes, Puerto Rico regulators closed my bank anyway for net capital issues rather than allow a sale to a highly qualified buyer promising to inject capital far in excess of regulatory minimums. As a result, accounts are frozen and customers may lose money. Ouch. They never let me know they objected. I found out in a cease and desist order to shut down the bank. Had they ever told the 4% stake was a problem, I would have restructured the deal. I just wanted out. I had to put in $7 million in the last 2 years to cover operating losses due to bad press. So 7 million of his own bucks, I think is what he's saying here. Also, it costs a fortune to run a small bank. He's been saying this on his podcast for years, but it has not been easy for him, especially. That's why I never really made any money. The compliance costs are outrageous. You think somebody like this would really love Bitcoin and flock to the narrative of Bitcoin, but no. So the Bitcoiners have really started kind of using this as an example of how great Bitcoin is uh, as an untethered, although it is quite tethered now in many ways, in many respects. Uh, yeah, anyway, it's also being so here's another headline you won't read. Peter Schiff's bank falsely accused by the media of facilitating tax evasion and money laundering is being closed because even though it's innocent, its premature conviction by the media ruined its reputation and crippled it financially. So because the media for I believe the last 4 years have been saying it's been involved with money laundering. We've covered it in the show in the past, and tax evasion. That's led to less and less customers, of course, and less credibility for the bank. And so his bank has been suffering a lot. But that's another thing that's been going in the rounds, and I wanted to make sure you were aware of. And then this is just another bit of the news. This was coming out yesterday, I believe, or 2 days ago, that there was a huge hack. Just another example of probably the biggest honeypot hack that I've heard in my entire life, where it does seem, in fact, credible that a hacker was able to get access to about a billion plus users' accounts in China and is selling that information for about 23 terabytes of data, including the names and phone numbers of 1 billion Chinese citizens, as well as police, medical records, much more. Information for about 10 Bitcoin. So they're saying, how come they don't ask for Monero or something more private? Why don't they use Tornado? Well, I guess they assume that more people have Bitcoin than they have Ethereum or Monero. That's another speculation that I've heard posited out there on social media. But yeah, it looks like this is in fact credible, according to some sources. Cybersecurity experts have confirmed that some of the records are genuine. So this may in fact be a legitimate hack. And there's been a sharp spike in the number of people that are being added to WeChat, a popular social network with China. So this spike would probably show that hackers are now using information and trying to get access to at least wealthy people. But it's the same kind of thing that we see with exchanges that are forced to have know your customer. Roger Ver was actually on Twitter a few days ago posting about this, about how you have the Bitcoin whales seriously in jeopardy because the exchanges, whether it's Coinbase, Binance, whatever, to abide by regulations, they have to collect information, addresses, names, phone numbers, and this could make these individuals a target if hackers were able to get access. And oftentimes hackers are able to get access to this information, and then they know exactly who to target when they want to rob someone. So whether that applies to whales or not, I think is obvious. I think that could apply to anyone, but obviously for a whale, it could be more problematic. But it also applies to political dissidents in the future, especially if you live somewhere that's increasingly less free. Then that could be used against you, your certain political stance by rivals who might want to again accept certain narratives to force you to think a certain way or persecute you for certain things. And even if you're somewhere less free, that's just more tangible possibility. So yeah, collecting data on people and being forced to store it can be quite malicious in and of itself. Anyway, we'll finish with our quote of the day. I hope you guys have enjoyed the show, and I hope you'll continue to show up and give us likes here. It helps the show go further in a big way as we relaunch here. What am I living for and what am I dying for are the same question. Margaret Atwood. I'll let you ponder that one yourself. I think it's quite deep. But thank you for those of you who I haven't had a moment to thank for showing up and commenting, like OG Foundation, like Lejoshk, and those who always participate. And I really couldn't be more grateful and more appreciative and loving to you guys than I am in this moment, and I've been. So thank you for showing up. Take care. Much love, everyone, and stay cryptic. Peace.